Business Times. Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Here's your U.S. markets wrap with me, Ryan Huang. We've got new highs on Wall Street yet again, and that's seeing stocks lifted by fresh economic data alongside some of the corporate earnings coming through. The S&P 500 added 0.5% to 6,297. Its ninth record close this year. The tech-heavy Nasdaq also hitting a new high, rising 0.8% for its 10th record close. And the Dow Jones Industrial Average was up 0.5%. To help us navigate what's happening in the markets, we've got Ben Emons. He is the Chief Investment Officer for FedWatch Advisors. Ben, good morning. How are you doing today?
Good morning. I'm great. It's like the quiet sound that you were talking about with no traffic on the road, right? That's what those markets are.
All right. Nice and quiet. I'm just wondering what that tells us for the days to come. Is it the calm before the storm, or is it going to be all smooth sailing? So let's start there with the record highs we are seeing. Is it justified with all the numbers coming through?
Well, the earnings numbers are better than expected once again. I think it just underscores the strength of the economy, that it's not really affected by the tariffs, fortunately, because it looked quite dire a few months ago. In part, I guess, because we continue to delay the worst of the tariffs, or there are a lot of foreign companies actually absorbing those tariffs to continue to sell the U.S. And secondly, the inflation picture, although affected, there's no major surge of inflation, which, if that had happened, markets' view about Fed policy and where interest rates should be would have dramatically changed, no matter what President Trump is trying to do, and then you do get a different market environment. So this is why we're kind of brimming here at the peak of the market without much of any change at this moment in time. You could always call it a calm before the storm, that it feels complacent because volatility measures are down and that sort of thing. But at the end of the day, it's really about the fundamentals, right? It's the economy that's sort of hanging in there.
Yeah, so it's interesting to see all these record highs being hit despite the uncertainties. And of course, we are also ticking closer towards the August 1st deadline, where tariffs around the world will be kicking in. And of course, question mark if that will be another can kick down the road. So all that playing out, let's focus on the data that we have with the earnings. And Netflix reported some numbers beating expectations. And that to some degree kind of reflects what's going on around the world. So we've got a weaker US dollar. That seems to be helping them to some degree. Also, it seems like consumers are still paying for their subscriptions. I'm not sure how much of an indicator it is for resilience among consumers. What do you take away from some of these numbers?
Well, if you look, for example, at earnings for this season, and you look at earnings surprises, then it's the consumer discretionary sector that surprised the most. It's like the biggest beat is happening in that sector compared to technology or financials. And so that's notable because, as you mentioned, there was a lot of angst about how this consumer had to suddenly pare back on anything because of tariffs, but it's not really playing a role. Employment, by the way, also has improved again. The payroll number with improving jobless claims the last few months. And that's how quickly that goes, right? It's very quickly the consumer spending just picks up as the employment picture improves. And that's, I think, all playing a role here.
All right, talking about what else markets have been watching closely. What's playing out with the Federal Reserve? Fed Chair Jerome Powell, his job security under question. Some reports that Donald Trump was thinking about firing him, and then he kind of poured water on that idea, or at least speaking to the media. So what do you take away from what's been playing out with the initial reactions in the market? And then I suppose we will talk about the implications if we do see Fed Chair Jerome Powell being replaced.
Yeah, so the initial reaction is obviously negative because people do that as an instability, right? If he gets suddenly removed, whatever the reason is, to do with that renovation, the cost overrun, or the unhappiness overall with his performance, Trump is challenged by the legality of going that direction. Let's say that he is removed, and you're getting volatility. Why? Because we just don't know who the leadership of the Fed currently is. Even though it will not affect directly Fed policy, because it's the committee that makes the decisions, still the committee will be impacted by having the chair suddenly no longer being there, and that you have an acting chair, which is likely the New York Fed President Williams or the Vice Chair Jefferson, but those are not really chairs, right? They essentially are waiting for the president to announce his own candidate, who will not be on the FOMC, but yet will start playing some sort of a role in the decision-making process ahead of being confirmed. And I think that all adds to confusion. That's how markets responded to it yesterday. Like, it's been taken away by Trump himself, just like he did with the tariffs, right, on April 9th, April 8th. He did the same thing this time with taking away the uncertainty about the Fed Chair. But it will come back at some point again. Perhaps when markets are even more common than they are now, to revisit this issue, because it's a recurring issue. But if it does, Powell will not just step down. He will serve out his term, and there will be a legal case that could go well beyond the end of his term as the chairman of the Fed. So it's not clear if Trump is really going to pursue that road. But, the cat is out of the bag, as they would say in the U.S., right? Meaning, clearly there's signals here that they're really looking actively to make a change at the Federal Reserve's leadership, if not overhauling the entire FOMC at some point. I mean, it takes time, but it's clearly a signal here.
Yeah, Ben, so like you pointed out, if we do see Fed Chair Jerome Powell being replaced, he's just the chair, and you do have the FOMC casting a vote in terms of policy settings. Donald Trump wants faster rate cuts, but if the FOMC governors and everyone who has a vote decides on their own accord, how much can it change things if you just change one person?
Could potentially change it. It's a bit of a game in that sense, like a groupthink, right? As in, if the message is about I'm removing him really because I want interest rates to go down, and if you don't follow this idea, right, then you may be next idea, right? So that you get that groupthink. That's a possibility, but I think it's really low because most of the people on the FOMC, if not everybody, is really clear about independence and not want to be labeled as politically influenced official. Because, they're in it for longer term than the president's term, right? So it could really affect their own term in the future. So I think there's not a good reason why these FOMC members would do that. They would just continue to follow models and data and be objective about the economy and where everything is to make their vote on where they think it should be going. So it's still very much of an economy data-driven process. But that there is some influence is being noted now. There are FOMC members that have already shifted towards rate cuts. There's a third one today, actually, Daly, who also started to become more open to the idea of cutting rates sooner. So you can tell there is influence, right? And I think that matters to me.
All right, lots to watch out for as we take closer towards the next FOMC meeting, as well as the August 1st deadline for tariffs. And we've been in conversation with Ben Emons. He's the CIO for FedWatch Advisors. Ben, always great chatting with you. Thank you so much for your time.
Thank you very much, Ryan. It's great to be on. Thank you.
All right, we'll catch up with you again soon. Stay with Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.